All eyes are on a new decentralized finance protocol. Aster DEX allows to bet on various cryptocurrencies with more than 1000x leverage. Now, it's a new perpetual futures exchange that has been launched on the Binance Smart Chain. It's a direct competitor in an ever-growing market. The main player in perpetual futures is Hyperliquid, but now Binance, indirectly with Aster DEX, tries to compete. So maybe there's an opportunity here. Let's have a look at the data most people are not considering. Aster has a market cap of $1 billion. The largest competitor is Hyperliquid with a market cap of $15 billion. So is there potentially a 15x from here possible? If you take it very precise, Aster is actually not completely new. It has been a rebrand of APX. And holders of the APX token were able to convert into Aster and thus got a massive price increase. Now over here we see the total value locked on the Aster protocol. It's also now shooting up with the rebrand, as is the usage of the project as well. Because while it's reasonable to argue that this TVL is just going up because of the Aster price itself going up, that's not necessarily what's going on. Here are the fees that get generated on Aster over time. It's close to $500,000 every day, and that's all through this platform here. 101x leverage on Bitcoin. You're betting $100 and move $100,000 in value. Now there's a very good argument to be made that 1000x leverage is rather gambling than investing, and that also market manipulation can have a massive impact on the position. Because how accurate is really the price feed of Aster? That's to be seen. I'm not going to use 1000x leverage, but it's definitely an interesting marketing gig at least, even though it's not a good long-term investing product. Besides the massive leverage, there's also something else that puts Aster apart from the competition, and that is stock investing. There used to be a time where stocks on the blockchain was a very controversial topic, but now regulation becomes a bit more loose, especially in the US. And so Aster offers betting on various stocks: Apple, Tesla, Nvidia, Amazon, Meta, etc. There's even the possibility to lever the Nasdaq 100 with a 50x exposure. And so there are three things that are interesting here. First of all, we've already got quite a bit of usage on the platform, right? $500,000 of fee generation every day. Secondly, we've got a differentiated product. We've got very, very high leverage, and we've got the betting on stocks. And third, and maybe that's the most important thing, we've got also support by Binance. And so maybe there's a chance here that Binance will push the platform that much that it then ends up competing with Hyperliquid. Here's the Twitter profile of Aster. And the first mentioning here is the backing by YZI Labs. YZI used to be called Binance Labs. And of course, CZ, the founder of Binance, is an intern at this place. And so yeah, that's now the market that Binance tries to enter. The perpetual futures market in DeFi, directly on the chain. Not anymore on the centralized exchanges, because that's where actually Hyperliquid is shining. There was a lot of perpetual futures trading already on the centralized exchanges, but that was mainly KYC backed. With Hyperliquid, one can simply just use the platform without any KYC, without any problems. The major issue before Hyperliquid was that the fees and the pricing on other perp exchanges wasn't ideal. DYDX, for example, didn't really get that much traction. But have a look at this. This is now the perpetual futures market in terms of trading volume, broken up by different blockchains. And of course, Hyperliquid's layer 1 is at number 1 with 12.6 billion, and the Binance Smart Chain is only at $500,000. And this is where the potential growth lies. The TVL on Aster is already going up. It shot up massively with the recent price surge. The staking program shows a mixed picture. We don't see that many people staking APX over time. And of course, there are now two kinds of tokens. There's the new Aster token with 1,600 holders, but there's also the APX token. That was the initial token that Aster got merged into. And so let's have a look at the APX token with way more holders. We don't necessarily see much growth here, except that some whales bought quite consistently, and now the whales all converted into Aster, and the smaller wallets are a bit slower at doing so. By the way, those three charts, in case you don't know them yet, this shows the number of retail investors on the left, medium-sized investors in the middle, and whales on the right. So we just look at minimum holding thresholds. So to be counted for the chart on the left, a wallet has sold at least 2,000 tokens, and it's 20,000 tokens for the middle, and 200,000 tokens for the right chart. Long term, it's a bit unclear where the token will go. Currently, of course, there's a lot of hype and there's a lot of potential, but there are a lot of tokens that will get airdropped over time. And then the question is, will those tokens get staked? Will those tokens still stay in the ecosystem, or will they get sold off? The tokenomics show 53.5% of the token supply getting airdropped. And very often airdrops do get sold off over time. Now, this airdrop is not just allocation that gets released today. This allocation gets released over the span of 7 years. But still, that shows us a potential constant sell pressure if the team is not very inventive with potential use cases for the token. The Hyperliquid team is quite smart when it comes to the utility of the hype token. There is a staking program, and one can get, of course, a bit of return on the staked hype, but also there is trading fee reductions. And that's actually the main thing, the main incentive to hold the hype token. Maybe something similar will happen for Aster as well. So we have to see the Aster platform getting used more and more. If that's the case, if we actually see growth in the platform, then maybe we see more staking over time, and maybe that can support the price of the token long term as well. Right now, most of the price discovery still happens on the spot market, so directly on the Aster platform. There's now 390 million worth of trading volume in the last 24 hours. But we've also got the old APX token. Here, most trading happens on PancakeSwap, which is also on the spot market. So at least we don't have that much perpetual futures leverage in the price right now. This is a risky project, but it's also a project with quite a bit of potential. If Binance is really going ahead and pushing Aster further and further to directly compete with Hyperliquid, then there's easily a 3, 4, 5x from here possible. The most important thing is to simply watch the usage statistics of the platform. Do we see new people coming into the space? Do we see people that currently use Hyperliquid, potentially also trying out Aster? Let's have a look at this over the next weeks. I will, of course, continue to make updates on Aster on this channel. And so feel free to subscribe over here in order not to miss the next videos. I try to be as objective as possible on this channel. I try to simply just present the data, and then you can make up your mind yourself whether or not it makes sense to buy or sell a particular asset. Now, here's a common misconception. Most people think that there's some kind of a direct connection between risk and reward. As in, if we are willing to take on more risk, we should also get more reward long term. But it's actually not true in crypto. This is the smaller altcoins and their performance in the last year. There are 2 altcoins out of those 100 alts that actually did better than Bitcoin. There is Purple Pepe and there's the Cult token. Bitcoin during the same time almost doubled. But have a look at all of those other tokens. It's to be expected that the majority loses, but is it really expected that in case you get the winner, you only outperform by 250%, or in this case, only 35%. Had you bought a somewhat diversified portfolio of those altcoins, you're pretty sure to have lost versus just buying and holding Bitcoin. And again, a diversified portfolio of those tokens is definitely more risky than Bitcoin is. So really, there is no direct connection between risk and reward. We always have to figure out what's the best risk-adjusted return in the market. Or have a look at this, the Pump.Fun ecosystem that recently starts to get some traction again. How many people actually make money with Pump.Fun? The answer is very, very few. 99.6% of Pump.Fun traders have not made $10,000 in profit. And I would argue that $10,000 of profit isn't even that much in crypto. It really poses the question, does it make sense to enter a game where there's a 99.6% likelihood that the game will not end up that well? There's all kinds of reasons for the long-term underperformance. There is a potential selling by insiders that simply scoop up a lot of tokens very early on and then sell as the momentum increases. There's also secret over-the-counter dealings, as in big venture capital firms that might buy up tokens for a discount and that then dump those tokens once they release, once the vesting period unlocks. That's what happened here with Mantra DAO, with the Ohm token. That went from above $8 all the way down to 21 cents, right? More on this was discovered in the interview by CoffeeZilla with the founder of Mantra DAO. But most of the time, the declines in the price aren't that dramatic. They're simply just gradual underperformance because of gradual unlock. What we're seeing here is the weekly unlocks of the altcoin market. It tends to hover at around $1 billion. So if there's not at least an additional $1 billion worth of demand every single week, we tend to see underperformance of the alts. By the way, Bitcoin has a weekly mining of roughly 300 million only, and Bitcoin is much larger than the entire altcoin market. And of course, Bitcoin also gets purchased through the ETFs and through the treasury companies, which cannot be said for the majority of smaller altcoins. And so that's why Bitcoin tends to do better than most altcoins most of the time. Let's have a look at a token that will see some unlocks. For example, here, the APE token. This is the circulating supply over time. And again, if demand doesn't grow as quickly as supply, then the price has to go down. And so this is APE relative to the US dollar. And this, of course, then opens the question, does it potentially make sense to still make money with this? Because there are various instruments to bet on falling prices and make money with falling prices. The problem with doing that is that sometimes we do have our rallies as well, right? This is a rally of 270% in APE. A lot of those smaller rallies have something to do with the market in general going up, because there's all of this correlation, right? When Bitcoin goes up, when Ethereum goes up, then most altcoins go up as well, and vice versa. So just betting on falling altcoins plain and simple like this is very risky as well. But there is a solution. We can bet on falling prices of ApeCoin in this example, at the same time rising prices of Ethereum. Now this chart looks much less volatile than this chart, right? There's less short-term rallies and we see more constant underperformance over time, because now we filter out a lot of the macro development. Betting on falling prices like this is much better. So we're basically flipping this chart around. We're going short APE, we are going long Ethereum, we get this performance. And there is a levered effect. So for example, had you opened that position 2 years ago, you would have made 476% gains, while the supply of APE tokens didn't even double during that time. So the leverage effect works in both ways. An additional dollar into the ecosystem increases the market cap by more than $1, but also every dollar that's getting pulled out of the ecosystem tends to decrease the market cap by more than $1. It works both directions. And so this here is the performance on logarithmic scale. This is the same on a linear scale. And this is the way how I personally make my money in crypto. I don't try to find the next 10x altcoin that's likely going to burn us. I simply just bet on the market structure. The market structure is that the venture capitalists and the early investors and the team, etc., all those insiders, they tend to offload tokens over time. There's constant selling pressure on many altcoins over time. Just think about this logically. What would you rather try to do? Find the 1 or 2 altcoins that are green on this screen, or just flip this entire picture around and everything that's red becomes green and everything that's green becomes red. Suddenly the odds are in our favor, right? If we bet on falling prices of altcoins relative to the rest of the market. I have followed the strategy for the last 4 years, and had I just dollar cost averaged into Bitcoin, I would have gotten the return that's shown here by this light gray line. But instead, because I also bet on falling, very poorly performing altcoins, I got the performance that's shown in the black line. So we can generate relatively consistent outperformance. Yes, there are a few months where we're just going sideways and where we don't necessarily make money, but the overall trend is very clear. And so it might seem a bit complicated, right? We're not just buying an altcoin, we are betting on rising prices and on falling prices, and we don't even just use the spot market, we're even using perpetual futures. So we use derivative contracts. It all seems a bit complex, but in the end, it's actually not that hard. I have made dedicated videos on the topic, and you can simply just watch those videos. The most important ones are over here, using perpetual futures to bet on relative valuations and also extremely important, risk management with relative valuation bets. Once you've watched those 2 videos, which in total is just 1 hour of content, you know exactly what to do in order to get performances like this. I'm so confident in this strategy that after you have watched those videos and you've joined the community, I will send you my favorite trade. Now, my favorite trade is not anymore betting on a falling ape price, because the circulating supply of ape will not go up that much anymore, relatively speaking. But I will show you my favorite trade, and if you do not make money with that favorite trade, when you've joined premium and the favorite trade didn't make you money within the first month of holding the position, then I will refund the premium membership fee to you. So just join the trade, see if you make money, and if you don't, then this $125 are never spent. I will just send this back to your credit card. There's also a way to pay for premium in crypto that's also described on the page that's over here. The minimum duration for crypto payment though is 3 months. So you might want to start out with credit card first. I am of course sharing every single trade that I make. So I'm not just sharing my favorite trade where there's the money back guarantee. I'm sharing every single trade as I make them in real time in the chat. A link to premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.